Time now for today's market movers with easy to follow futures and options trades from CMEGroup.
Welcome to Market Movers. I'm Jim Urio, and today we're talking about market expectations of central bank policy. 1 month ago, the market thought there was above a 90% chance that the Fed was going to raise rates this year. That probability has tumbled to around 44. We're looking at using weekly euro currency options 6E as a means of hedge or exposure to this shifting picture. Joining me is Chief Investment Officer of Kingsview Asset Management, Scott Martin.
Hi, Jim.
Okay, Scott, the Fed pivoted toward more dovish about a month ago, but so has the ECB. Why has the euro continued to shoot higher from a 103 low at the beginning of this year?
Well, because coming into the year, wasn't it obvious that the downward trend in the euro was going to be maybe the easy trade of the year? That's probably why, Jim, because when you surveyed investors, traders, sentiment on the street, it was all bearish euro. So when you have a trade like that, that to me is overloaded on one side, it's easy for it to go the other way.
Okay, now we have a new element to this whole picture in the dollar, which is global tensions that have heightened recently. Can this boost the dollar even though we are embroiled in the middle of the controversy?
The center of attention so far has been the U.S. with regards to North Korea. And what's interesting is it can benefit the dollar because, like it or not, the dollar is still that risk-off trade. So any global tensions that may pop up might at least support the greenback a little bit.
I kind of believe that as well. Now, before we dive into our trade discussions, I'd like to point out that as with all market movers, it's important to view these trades as examples that allow you to see different ways to use futures and options products to manage risk or create additional trade opportunities, not as recommendations or advice. Prices and movements will vary in the markets. When we're filming this right now, the euro currency is trading about 1.1780. That's the September contract. Scott.
So I love the euro. The euro is a fun currency to watch, as we kind of hit on. And we've had some success in talking about euro trades before, the 6E. So let's try to keep that going, shall we? Today, I'm looking at something interesting. Looking at the week 4 6E euro contract, specifically, Jim, the 117.5, 118.5 call spread. It's about 46 ticks in cost. It expires the 25th, as I mentioned. The underlying is about 117.80. It's going to risk 575 to make a potential 675. Now, why did I pick out these levels? If you look at the chart on the 6E, there's a 20-day moving average around there near the bottom of that range. And also, this trade, by the way, is in the money so far. So you're getting a little bit of benefit there. But if you look at where the moving averages come in, I believe there's some support there where, given this recent sell-off, we're going to see a bounce off that, even if it trades down there, and it's going to fill out this call spread I highlighted.
When you started saying it, buying a call spread that's in the money seems non-conventional. But when you think about it, that's actually a pretty attractive way to get long. You have 30 ticks of intrinsic
cushion,
built into it already.
And
like
not
that.
A ton of cost to it either.
Right.
If you look at the risk-reward there, I think that's favorable for buying into something that's already taken place.
I'm the other way. I think the dollar should rally with the global tensions, and I think the euro has moved awful far this year. So I'm looking at the week 4 August, the same expiration date as you, the 1 spot 1650, 1 spot 1550 put spread for 18 ticks, which is 0.0018. We call that 18 ticks. This trade expires August 25th, like yours. 60 underlying the SEP contract, which is currently trading at 1 spot 1780. I know that's a lot of numbers. This trade risks $225 to make a potential $1,025.
I'm following you through those numbers.
Good.
But see, again, you jumped into my Cole Haans, because my shoes, that is, if you're playing at home, because you're taking on a trade or a position of exposure that gives you a very nice risk-reward potential for just a couple things to really happen, which is the style I like to do. So I obviously am taking the other side to this trade with respect to how I view the euro, but with respect to the risk-reward here, it's got some favorable attributes.
I know nobody knows, but do you think in a couple days we're still going to be talking about global tensions?
I think we're talking about it more, to be honest with you. I think it's something that
deal.
Kim Jong-un likes, and it's something to keep an eye on with currencies, because that's where you see typically big reactions to these events.
Thanks for joining us in Market Movers. I'm Jim Urio, where we are helping to make you a better trader.